Hey guys, let's have a look at oil.
Wait.
Matron, take them away.
And a warm welcome to one and all. This is your first time here. Big fella. That is the Scruffy Trader. And sitting next to me is the little lady, Winky. Because she's Tinky Winky person, one little.
What about little?
Yeah, you are. And it's Friday, so it's a good day. But why is it a good day? Well, it means the weekend's coming. We were looking for some sun, but that's not happening. So I guess I'll look at the chart. See what's happening there. Well, there's not a lot, to be honest. But oil is interesting. And so we're going to have a quick Friday trade. It's starting to look pretty good. I'd like it to pull back here somewhere or break the tops of these. So I'm going to drop a couple of orders in just now and then I'll take you through it. Now, if I take this down to 5 minute and then I'll break it up, you can kind of see there's a colossal bumper coming up, but because it's had a push, it will dip back on itself, which is what I'm kind of angling for. And you can get good money out of oil relatively quickly because it bursts very, very quick. So why am I interested in it? What's got my emotions running? Well, the first thing is I work out biases, and the three markets I was looking at today, two of them, there's not a lot going on in this hour segment because it's now 10 o'clock. But oil is, and it's telling me it's a pretty good buy, and see what you can find. Now, because of its volatility, just drop another order in actually. Just while we're talking, in case I forget, because I like to trail. I'll explain this. Okay. So earlier on this morning, keep it sort of in check. I start scruffy biases. Okay. Now, scruffy bias is exactly what it says it is. It's just me working out what I think the chart's going to do, and I'll let the guys see it. Now at 9 o'clock, there was nothing. So you wait. Patience is your best friend in trading. If you chase the market, you'll find you're going to be on the wrong side of the trade more often than not. So you wait. And then I pop this in so the guys can see it before I trade it. But I'll take it a little bit further than that. Because up on here, do an oil breakdown. And there it is there. So I'll go through exactly what I'm about to do now. And sort of give them my thoughts, what I'm looking for, why I think they're there. And the watered version is it's multiple time frame. And I'll start at the top and I'll work my way down till I have confluence across them. If I haven't got that confluence, in other words, the hour's not matching the 15, the 15's not matching the 5, or whatever time frames you choose, because you might like day 4 hour. If they don't align, well, is it a good trade? The chances is no, it's not a good trade, and you're taking a punt. And that's something that I try to sort of get across quite a lot. Less is more. In fact, I have less is more on my journal. I did a webinar of sorts yesterday for 5%ers, and I highlighted that on one of my journals that I actually have it in front of me. And I have it in front of me for a specific reason. It is there to remind me to not chase the market. It's a good tip. So let's look at this chart. Well, if I start out at an anchor chart, which is here, okay, what we're seeing is a big drive up, consolidated, it's come down, but it's failed to breach the low of here. So the inertia is still kind of to the upper side. Now, it is in a range of sorts, but if I'm looking to the top end of the range, which you can see where I'm targeting, it's around this area here. All right, so it's a reasonable place to be. Okay, but let's step this out slightly and have a look at something. Well, with this, you can see it's been a colossal drop. It moved up, didn't come up to the high, or the low here, sorry. This high didn't match that low. So the pressure downwards was still there. Down it's come, but now it's struggling, and you can see that. We had a big indecision candle here, which then gave us this thumper. Now that thumper gave me something to work against. Why? Well, it was an aggressive move, but it hasn't continued aggressively at this point. It's tried to come down, but it's failed to dent it really too much. And now it's pushing the other way. All right, so that's an interesting concept to look. And if you just sort of take that out the equation a little bit, there is a range. All right. Now, there'll always be probes in the market. It's just the way the markets work. Okay, but that's the bit that I'm interested in, this block. Take it into a 1 hour. There is the block that we're kind of interested in. And it doesn't look as vicious now. Okay, because it's more meandering. So it is reasonable that this can push up. Why? Because we're above a key level. We're also holding above these levels here. And we're working our way upwards. Because that tail is telling me. Why? Well, that's pushed up. Consolidation. It hasn't come down aggressively. This isn't as big a thumper as you think it is. You know, because you can see indecision with a small body. And then the buyers have come in. Now, it's bought up for an hour. It's reasonable to assume it might buy up for the next hour. Get some money. And then you just need some trigger points. Well, if you look down on a 15-minute, we know it tests levels. Well, there's one. And then if I put an order above it, I can follow the price down and get my order in both ways. So it's a little bit of a hybrid scruffy madness, if you like, or hybrid pound averaging. And what that means is you're trying to buy. If I just enter the market here, I'm committed. I want the price to come to me, show me its worth. So that's why the one at the top is. But I would also like a better price than where it's at. So if it does come down and picks up, it's a reasonable assumption it'll bounce off this level. Why? Because, well, they do. You know, they stall at levels. They bounce at levels. So just have an order waiting here. Down, pick it up, back up. Or if it is moving, when it breaches the top of this candle that it's sitting in, off it goes. But all I'll do is I'll just follow the price down to the top one or the bottom one triggers, delete the other one off, and then put in some more averaging points. It's a good way to trade. It's a simple way to trade, but it pays off. So let me run it out and I'll catch you soon. Okay, guys, that's it. Stopped out. Now, I'm left at a quandary. Do I re-enter the market, or do I just quit? Well, it's Friday. It's 11 o'clock. Don't like trading Friday afternoon. Do I want to take this back into market? Not particularly. So I'll just leave it there because I've had a really good week. Because sometimes knowing when not to trade is the right thing to do. And if you look at the screen and the level that I put in, it went down to the tick. Literally. Boom. Bang on it. And now it's pushing away. Now I could go in for a second bite at the cherry and sort of make a little bit extra. But it's always process over money. Money is never in the equation. That's the byproduct of doing my job correctly. And today, it's 138 quid for, well, I started this at 10 o'clock. It's now just after 11, so that's 1 hour's work. I can live with that. It's not all about fame and glory. In fact, that's probably the worst thing you can do is look for glory. Follow the process, guys, and you'll be fine all the time. So, very quick one. It's just really to show consistency on my trades, how I do it, why I do it. And do check the rest of the channel out because I do put educational stuff up. A lot of psychological stuff because the mind game is what can make or break you as a trader. And it's knowing how to control yourself. Journaling. Know how to wait, which chart to work on, all this sort of stuff. So if you're interested, there's plenty of it about. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.